Welcome back to AlgoBot, where we break down automated trading strategies for MetaTrader 5, one idea at a time. I'm your host at AlgoBot, and today we're exploring an expert advisor called Interquartile Range Breakout. This strategy takes a fresh, statistics-driven approach to spotting the moment a quiet market begins to move. Instead of relying on ordinary volatility tools that a single wild candle can distort, it borrows a technique from robust statistics to measure the true body of the market. By the end of this video, you'll understand how it builds its value band, how it detects compression, and how it defines its entries and exits. Let's get started. So what exactly does the Interquartile Range Breakout Expert Advisor do? At its heart, this is a volatility compression breakout strategy, but with a robust, statistics-driven twist. Most squeeze detectors, like Bollinger bands, standard deviation, or plain average true range, can be fooled by a single dramatic candle. One oversized bar inflates the volatility estimate and hides a real consolidation. This strategy sidesteps that problem by measuring the body of the market using quartile statistics of the recent closing prices. Here's the idea in plain terms. The strategy looks at the last several dozen closes and finds the 25th percentile, called Q1, and the 75th percentile, called Q3. The band between them, from Q1 to Q3, is where the middle 50% of closing prices actually sat. That is the statistical value cluster, or fair value zone. The distance between them, Q3 minus Q1, is the interquartile range, and it serves as a dispersion gauge that quietly ignores the outer tails and the occasional spike. The expert advisor waits for that range to compress, signaling a coiled, low-energy market, and then watches for a decisive close beyond the band. It trades both directions symmetrically, going long on an upside escape and short on a downside escape. Risk is handled with an average true range stop loss and take profit, each set as an independent multiple. This approach may appeal to traders who are drawn to breakout and volatility cycle concepts and who appreciate methods rooted in robust statistics. It runs on a single time frame, whatever chart you attach it to. As always, remember that this is educational information only, not financial advice, and that trading carries real risk, including the risk of loss. Let's walk through the mechanics step by step, exactly as the code executes them. The expert advisor works on completed bars, so it evaluates its logic once when a new bar opens, judging the candle that just finished. First, it builds the value band. It takes the closes sitting behind the signal bar, by default 40 of them, set by the QuartileLookback parameter, sorts them, and computes Q1 and Q3, the 25th and 75th percentiles. The interquartile range is simply Q3 minus Q1. Second, it checks for compression. The strategy keeps a rolling history of past interquartile range values, 60 of them by default, through the CompressionPct parameter. It counts how many of those prior values were smaller than the current one and converts that into a rank. For the market to qualify as compressed, the current interquartile range must sit within the bottom fraction of its own history, 30% by default, set by the CompressionPct parameter. This confirms a genuine low dispersion regime rather than a quiet patch faked by one comp stretch. Third, if the market is compressed, it runs the escape test on the just completed close. The upper level is Q3 plus the breakout multiplier times the interquartile range. The lower level is Q1 minus that same margin. The default multiplier is 1/2. If the completed close finished above the upper level, and the prior close was still inside it, the strategy signals along. If the completed close finished below the lower level, with the prior close still inside, it signals a short. That prior close check is a fresh cross filter, which keeps the strategy from chasing a move that has already extended. The strategy also allows only one position at a time for its magic number, so it won't stack trades. Finally, risk. When an entry signal appears, the expert advisor reads the average true range over its ATR period, 14 bars by default. For a long, the stop is placed below the entry at the ATR stop multiplier times the range, 1.8 by default, and the take profit above it at the ATR take profit multiplier, 3 by default. For a short, those distances are mirrored around the entry. Position size is fixed by the lots parameter. And that is the full cycle, from value band to compression to escape to managed exit. Let's look at the actual MetaQuotes language code driving this, as you'd see it in MetaEditor. At the top are the inputs. QuartileLookback sets how many closes build the value band. CompressionPct sets the history used to rank compression, and CompressionPct is the bottom fraction the current range must fall into. Breakout multiplier scales how far beyond the band the close must travel. Then come the risk inputs, the ATR period, the ATR stop multiplier, the ATR take profit multiplier, and the fixed lots volume. Below the inputs is the escape test. The code computes level up as Q3 plus the breakout multiplier times the interquartile range, and level down as Q1 minus that margin. The Boolean broke up is true when the completed close is above level up while the previous close was at or below it. That's the fresh cross filter. Broke down is the mirror image below level down. Now the two signal blocks shown on screen. In the long branch, the code reads the ask price, sets the stop loss below it at the ATR stop multiplier times the average true range, sets the take profit above it at the ATR take profit multiplier times the range, and calls trade.buy with those levels and the IQR long comment. In the short branch, it reads the bid price, sets the stop loss above the entry and the take profit below it using the same multiples, and calls trade.sell with the IQR short comment. Notice how both sides are completely symmetric. Same compression, same margin, same risk model, just inverted. Let's bring the strategy to life on a chart. On screen, you can see a candlestick sequence with the value band drawn directly over the price. The two gray lines mark the top and base of the value band, which are the 75th and 25th percentiles of the recent closes. Just outside them, the two blue lines mark the upper and lower breakout levels, each set half of one interquartile range beyond the band edge. Look at the first several candles. Price is drifting sideways in a narrow zone, and the closes are clustered tightly together. Because the closes barely move, the value band is thin, and the interquartile range is small. This is exactly the compression the strategy is hunting for. The expert advisor ranks this current interquartile range against its own recent history, and here it sits comfortably in the bottom 30%, confirming a genuine low dispersion coil rather than a false quiet caused by one odd candle. Now watch the breakout candle. Price pushes upward and closes clearly above the upper breakout level, the blue line above the band. The previous candle had closed back inside that level, so this is a fresh escape, not a chase of a move already underway. Both conditions are now satisfied. The market was compressed, and the close has decisively cleared the band by the required interquartile range margin. The strategy signals along, and you can see the buy entry marker appear on that candle. At the moment of entry, the expert advisor measures the average true range and places a protective stop below the entry at 1.8 times the average true range and a take profit above it at 3 times the average true range. That gives a target to stop distance of roughly 1.7 to 1 on this trade. Follow the next two candles. The value cluster that was holding price down has given way, and price expands upward in a clean markup phase. Each candle prints higher. The band itself begins to drift up in response, and price reaches the take profit target. You can see the take profit marker where the position closes for a gain in this illustration. Now the chart transitions into a second setup. After the advance, price settles into a fresh sideways zone near the highs. Once again, the closes bunch together, the value band narrows, and the interquartile range compresses back into the bottom of its recent range. The strategy is patient here. It does not act on the drift alone. It waits for the value cluster to tighten and for a decisive close beyond the band. Watch the breakout candle to the downside. Price drops and closes clearly below the lower breakout level, the blue line beneath the band, while the prior candle was still resting inside that level. That fresh downward escape mirrors the long side exactly, because the logic is fully symmetric. The strategy signals a short, and the sell entry marker appears on that candle. The risk is placed the same way, only inverted. The protective stop sits above the entry at 1.8 times the average true range, and the take profit sits below at 3 times the average true range. The following candles carry price lower into the markdown phase. The band edges roll over, and price reaches the downside take profit target, where the sell entry marker gives way to the take profit marker. Notice the shape of both trades. In each case, the entry came only after a quiet, compressed value band, and only when a completed close escaped that band by a robust, interquartile-scaled margin. By measuring the middle 50% of closes rather than the extremes, the strategy aims to stay honest in choppy, spike-prone conditions where an ordinary volatility squeeze might be misled. That is the core idea, illustrated candle by candle. And that brings us to the end of our look at the Interquartile Range Breakout Expert Advisor for MetaTrader 5. We covered how it builds a value band from the quartiles of recent closes, how the interquartile range acts as a spike-robust measure of dispersion, how the compression filter waits for a coiled market, and how a fresh, interquartile-scaled escape from the band defines both long and short entries, all managed with average true-range stops and targets. Remember, everything in this video is educational information only and not financial advice, a recommendation, or a solicitation. Trading involves real risk, and losses do occur. If you found this breakdown helpful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment with any strategy you'd like us to explore next. You can learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.